The moment we've been waiting for, guys. Apple just reported earnings. Same with Google, Amazon, Ford, Qualcomm, Starbucks. So we have to break down those companies in this video. And of course, we're going to break down the stock market, which had a freaking monstrous day across the board. The Russell went up over 2%. NASDAQ up 3.5% on the day. We had the S&P go up 1.5% as the Dow, funny enough, went down 0.1% on the day. So we have a lot to talk about in this video. All I ask from you is if you find value, hit that like button. Make sure to subscribe as well, of course, if you want to. And if you want some free money on top of that, make sure to get up to 15 stocks from Moomoo and up to 12 stocks from Webull. Link down below. And full disclosure, guys, all those links are affiliate links. So keep that in mind. If you do subscribe or not subscribe. If you do get your free stocks, just know it helps out the channel as well. I'm mumbling and jumbling because I'm pumped about these earnings. Let's get into it, guys. So Russell, again, S&P, NASDAQ, all across the board, everything went up. And if you look at the intraday, well, you're noticing we're selling off right now. The markets are dumping after the bell, which means some big tech companies are selling off. Let's just dive into that. Then we'll wrap back, to the markets in a couple of minutes. So let's see if Apple's earnings even came out yet. Last I checked, they didn't. Look at that. This is dumping. It looks like the numbers came out. So let's pop the live news tab up and see exactly what in the world is going on here. So it looks like they ended up doing sales for Q1 of $117.2 billion. If we come down a little bit more, what's the EPS? The EPS, I'm always having trouble these days, guys, trying to find these freaking numbers. Where's the EPS, guys? I'm not seeing it here. Oh, there it is. Q1 EPS of $1.88. iPad revenue of $9.4 billion. Let's see how the different regions. Greater China revenue $23.91 billion, Europe revenue $27.68 billion, Mac revenue $7.74 billion, and yes, we're going a little out of order here, guys, but we're reading all these numbers as they're coming through. Let's see here. Wearables, home, and accessories revenue $13.48 billion, and look at the iPhone revenue, guys. The iPhone revenue $65.78 billion. Unbelievable. Rest of it, Asia Pacific revenue $9.5 billion. So a lot of revenue comes from Asia, as you guys know at this point. And it looks like here Europe net sales were $27.68 billion versus the $29.74 year over year. So those sales are down. Apple sales are expected to show first decline in nearly 4 years, which we talked about this with Meta's earnings. The comparables are not the best, but if you look at 2020, at least for Meta, which if you guys didn't catch that video, I made a video earlier today about Meta going deeper into their earnings report. If you look at their comparables to 2020, they're pretty much growing on all fronts for the most part. So let's see what else here. It doesn't even say what the estimate was, which I want to see that. Did they beat the estimates or not? I'm not seeing that. But overall, what we are seeing is the fact that actually, no, they did. They missed $1.88 versus $1.94 on EPS, and they missed on revenue as well. The estimate was $121.1 billion. The number actually came in at 117.15. So they actually missed EPS and revenue, and the stock is now down. It closed at 151. It hit 152 at some point after the bell. Now the stock is down to 144 as I'm making this video. In other words, it is down about 4%, over 4% after the bell, which is not good. And this is one of my concerns. It was my concern earlier, which I talked about in my videos earlier. It was one of my concerns heading into the report because all these stocks, the big tech names, they were ripping like crazy heading into the earnings because of Meta, right? And I figured, and I was concerned that a lot was being priced in, and it could easily reverse if the numbers come in not looking as hot. And what do we just see? They missed EPS, they missed revenue, and the stock is now selling off 4%. That's what I was telling you guys. That, it looks like that is what's happening. So if we go to Google, and I'm going to make more videos tomorrow. I'm thinking, I made a video today going over the Meta, the presentation. I'm going to do that on Google and potentially on Apple and Amazon as well. So maybe 3 more videos within the next 24 to 48 hours around these companies. I'm thinking I'm going to be making those videos. So if you guys want to see a little bit more in depth here, I know we're running through them right now, but if you want to see me break down all these individual earnings reports, let me know in the comments, first of all, to make sure there's demand for that video. And second of all, if you want to see that, subscribe, because I'm most likely going to make those videos. So Google, you guys know, is my biggest individual stock holding, and well, it is selling off after the bell as well. Look at this. We went up 7%. Monstrous day for Google today. And at one point, after the, oh my God, look at that. After the markets closed, it shot to $113, all the way to 113. So it went up 7%. Then it went up an additional 4 after the bell, and now it's at 104. So now it actually gave back a lot of those gains, and we're down 4% now after the bell, which is not the best sign. And if we pull the live news tab up, I mean, I don't want to say it's not the best sign, but it's a sign that earnings are probably not looking that great. And overall, if we're looking at the chart, even though we're seeing this pullback, we're still holding an uptrend. You guys actually can see that. We're still well above the moving averages on the 4-hour chart. So let's see what Google ended up doing. They missed on EPS, but they beat on revenue. So they did EPS of $1.05, which missed the $1.18 estimate. Sales came in at $76.05 billion versus the $75.69 billion estimate. So they beat sales, missed EPS. Okay. And if we look here, Google advertising came in at $61 billion. Last year it was $59.04. So year over year, that is growing. Not like it's, used to, but again, tough comparables, but it's still growing a little bit there. Not too bad. And it looks like they reported Q4 cloud revenue of $7.31 billion, which is up from the $5.5 billion year over year. That's pretty good growth. Operating margin was 24%. Let's see here. Services revenue, $67.84 billion. Google Cloud revenue, we just said that. Traffic acquisition costs were $12.93 billion. Let's see here. Other bets revenue, $226 million. That's pretty much pennies on the dollar for Google, guys. Operating income, $18.16 billion. And look here, you guys know they've laid off some people. Alphabet says to incur $1.9 to $2.3 billion in employee severance charges. That's a lot of money, guys. A lot of money in employee severance charges. So if we come back up here a little bit, anything else? Nothing else really. I'm not seeing anything on guidance. I'm not even sure if these companies are going to issue guidance, which that in and of itself might not be the best sign. Typically, is no news bad news, I guess. Maybe if a company's not willing to tell us what the next quarter, the next year is looking like, there might be something that they don't want us to know, right? I'm not saying that that's the case for Google or Apple, but just in general, keep that in mind. And cheers, by the way, guys. Make sure, of course, to take a sip of your coffee. So let's see what else is going on here. Google, it's right around the highs now from the beginning of December at about 103, 104-ish. That's where we're at. Are we going to hold support here? Are we going to fall right through that point and start going under 100 again? That is the $1 million question, guys. But as of now, we're holding above 104, which is a pretty decent sign for the bulls. And let me pull up the next stock here, which is none other than Amazon, which Amazon right now, if I pull up the intraday chart, guys, Amazon's down. You can see here it initially shot up to 117, and we're talking here after the bell. It shot up to 117, and now it's at 107. So it's down about 5% from where it closed, and from the aftermarket high, 117, it's down 9%. So it's moving up and down, guys. Very volatile here for Amazon after the bell. So let's see what they ended up reporting. It looks like they did EPS of 3 cents, which missed the 17-cent estimate. It looks like sales beat, though, $149.2 billion versus the $145.45 billion. So mixed bag earnings from Amazon. It looks like they see operating income for Q1 of 0 to $4 billion. Okay. AWS revenue for Q4 came in at $21.37 billion, which was up from $17.78 billion year over year. That is not bad whatsoever. Pretty solid. And it says here, Amazon poised to post slowest sales growth in decades. That's from the Wall Street Journal. It looks like post 9% quarterly sales growth. Pretty good. I'm not seeing anything on guidance, though. Actually, no, I am. I missed it. Q1 2023 net sales of $121 to $126 billion versus the $125 billion estimate, pretty much right in line. And they guided for EPS or operating income. We said that already, 0 to $4 billion. So Amazon right now is selling off even more with each minute that's going by. It's now down almost 6% after the bell. And that's the reality of the matter here. We ran too much into these earnings, and I was saying this in my last video, the last couple of videos, right? And I think stocks got a little too excited, they got a little too ahead of themselves. Now, the good sign is in the short term for the bulls is these trends are not breaking. This is simply a little pullback. Seems like it's just a little bit of a cool off for a lot of these big tech names, Amazon, Google that we just talked about. These are still all holding pretty much their uptrends, right? You guys see that here on the 4-hour chart, which is, again, that is a very good sign for the bulls. Now, let's go to the next one here, which is Ford, ticker symbol F. Oh, wow, they're selling off too. They went up on the day 3.8%. Now Ford is down, and mind you, it closed at $14.30. It is now at $13.50. It is down a whopping 6% after the bell. So a lot of these are taking a beating after the bell, even though Ford is not a big tech name. It's an automotive company, right? It's still selling off, guys. It is still selling off. And if we pull up the live news tab, let's see what they ended up doing. EPS of 32 cents, adjusted EPS 51 cents, revenue $44 billion. And it looks like here they missed adjusted EPS, but they beat on revenue, $44 billion versus $40.3 billion. So that's a pretty nice beat. And if we look at the 4-hour chart on Ford, let me pull that up. This got way ahead of itself, no doubt about it. It got all the way to $15 today, guys. Insane. We got well above the highs from the middle of January. We took the highs out from December as well. And now, even though it's pulling back, it is still holding an uptrend, right? We're above the moving averages still. And this might be a point where, hey, we might get a pop. We're not seeing it yet, but I'm watching out for it in the, mid-13s on Ford. Now, we also had Qualcomm today, QCOM is the ticker. Qualcomm, did they report yet? They had to have reported. Yeah, they reported. So they ended up doing, where is it here? 237 adjusted EPS versus 235 estimated on sales of 9.5 versus 9.6 billion. So they beat adjusted EPS, missed on sales. All right. And they posted a 12% drop in sales. Ooh, that's not that good. And for guidance, it looks like they guided for Q2 EPS of 205 to 225 on revenue of 8.7 and 9.5 billion. Analysts think it's coming in at 224 per share EPS, which is, right in line with the estimate there. And they see sales of 9.4 billion, which is right in line with the upper end of Qualcomm's guidance. So we're noticing this one's not pulling down as much as the other ones. It is down a bit after the bell. In fact, it had a red day on the day, and it's only down about 2-3% after the bell right now. Nothing too crazy. And overall on the 4-hour chart, Qualcomm is still holding an uptrend, and we have that clear golden cross. We're above the moving averages, and as long as Qualcomm's above the moving averages, and I'd say above 129 to $130, which you guys can see, that was resistance middle of November throughout middle of December. As long as we're above that point, bulls are going to maintain or remain rather in charge. So not bad for Qualcomm in terms of price action. Earnings weren't the best, but hey, it's holding up decent right now, and we're going to be watching it heading into tomorrow. Now, everybody's favorite, maybe not everybody's favorite, but Starbucks reported, and this one has just been on fire. You guys know this stock has been going up, and away for months at this point, and there's no doubt it got way too hot heading into the earnings, and now we're selling off about $4 after the bell. This thing hit $110. It closed at 109 today, and now it's at 105. It is down percentage-wise about 3.5% to almost 4% after the bell. And let me mention this, guys. The uptrend is still clearly holding on Starbucks. In fact, the chart looks beautiful, let's be honest. And who knows, maybe this could end up playing out like it's played out in the past couple months, where buyers, each time it's gotten to the 180 SMA, buyers have come in, and, this thing's continued. So let's see if Starbucks holds here, 103, 105. Maybe we get a continuation play on this. And let's see the numbers. They ended up doing, where is it here? They ended up doing 75 cents adjusted EPS on revenue of $8.7 billion. Global same-store sales up 5%. International same-store sales down 13%. Oh my God, that's bad. It looks like they missed on adjusted EPS, 75 cents versus 77 cents. Sales also missed 8.71, 8.78 billion. Stores in the U.S. and China comprise 61% of the company's global portfolio, with 15,952 stores in the U.S. and 6,000 stores in China. China comparable store sales decreased 29%. So, Starbucks is having a rough time right now in China by the looks of it, guys. Again, same store sales decreased almost 30% there. And this is a good argument against people that say, oh, if you only invest in American companies, you don't have any international exposure. Well, did you not hear what I just said, guys? Starbucks, and this is for a lot of companies in the U.S., right? A lot of them have a lot of international exposure. Starbucks, they have 6,000 stores in China. And even though they're struggling in China, no doubt about it, with same-store sales down 30%, they still have a lot of exposure in China. And I'm sure, it's, they're going to do better in China, to do well. It's just a short-term blip, in my opinion, over there. Who knows how it plays out for Starbucks in China, but I think they're going to do well over there. And who knows, maybe them having a lot of exposure in China is a bad idea, but I think it's not that bad of an idea. And a lot of companies out there, again, that are in the S&P 500, they have a lot of exposure to not only places like China, but other places like Europe, and the list goes on. So not too bad for Starbucks. We're going to be watching it right around here, 103, 104, right by the 180 SMA. And we also had Gilead report, Gilead Sciences. Let me pull this up. Did they report? Yeah, they did. So let's see what they ended up doing. They did $1.67 in adjusted EPS, which beat the $1.69 or 49 rather estimate. So that's good. Sales beat as well, 7.39 versus 6.64 billion. So not too shabby there for Gilead Sciences. And it looks like they raised their dividend to 75 cents. What was it before? I don't even know. Whatever. It doesn't really matter. I'm not going to buy the stock. I don't know about you guys, but I'm just covering it because they reported earnings. So, yeah, let's watch it. It's up a little bit, $3-4 here after the bell, which is not too bad. That's pretty good, actually. And if we pull the 20-day, and by me saying I'm not going to buy it, I mean as a long-term investment, right? As a trade, I might trade it. That's for sure it's a possibility, which is why we're covering it in this video. So I'm going to set my alert here right around, let's say 86.50. I'll put my alert at 86.50, and we'll see where it ends up going from that point. So mark is at or above 86.50, and yeah, I mean, that's pretty much it, guys. Let's loop back around here to these markets and see what's going on after the bell before we wrap the video up. So looks like SPY's right around 414 right now still. Triple Q is at 307. What's S Triple Q at? Let's see. What's this thing at? 34.36. Look at that. So we are starting to get a nice little pop on S Triple Q. And we can see here on the 4 hour, it's still very oversold. So this is one that for sure I'm going to be watching for tomorrow. No doubt about it, as I do think maybe, we don't know for sure, but this selling could trickle in to tomorrow. Maybe I'm wrong. I have no idea. But yeah, a lot of stocks are selling off, and a lot of these big tech names are at critical points. So what do you guys think? Let me know your thoughts in the comments. Don't forget to get all your free stocks, up to 15 stocks from Moomoo and up to 12 stocks from Webull. Link down below. And just know, guys, all those links are affiliate links. They help out the channel. And if you want to join the Patreon, you want to work more with me one-on-one, get all my posts throughout the day, that's on Patreon, link down below. And with that being said, I'll catch you in the next one. Peace out.